Hello and welcome to this new video. Today I'll show you my analysis of Palantir. I'm recording this video before the earnings release so that I can evaluate it neutrally, without the volatility that comes with earnings. Let me start with the news that shocked the markets. As Forbes reports, Palantir's CEO is selling 9 million shares, worth approximately $325 million US. Forbes writes, Ryan Taylor, the Chief Revenue and Legal Officer, Peter Penishek, the Chief Accounting Officer, as well as directors Lauren Friedmanstadt and Alexander Moore, all sold between 6,000 and 150,000 shares since September. It's understandable that they want to diversify their wealth and not build their fortune solely on Palantir stocks. However, the timing of their sales is crucial. They all sold before earnings, which increases the probability that they might not meet Wall Street's expectations this quarter. I mean that they might deliver good numbers, but the internal expectations are so high that the stock might drop several percentage points after hours. In our YouTube portfolio, where we're up nearly 100% on Palantir stock, I've realized some partial profits. I entered this portfolio too late, and a double-digit correction would have significantly hurt the portfolio's performance. Consequently, I sold 5 shares. Palantir was previously the third largest position in this portfolio, and since the beginning of the year, we've achieved very strong performance with the portfolio and clearly outperformed the market. Let's quickly look at the fundamental data. Palantir has a price-to-sales ratio of 37.9 and a price-to-earnings ratio of 232.1. This might seem very high to many, but it's important to note that Palantir has only recently become profitable. For new companies, it's normal and understandable to have a very high PE ratio. During the correction phase, the stock will grow into its valuation, and increased profits will lower the PE. Palantir's future prospects look very good. They're expected to achieve 23% profit growth and 23.6% EPS growth, which is very strong, and there's a possibility they'll exceed these expectations. If the AI trend continues and it seems like there's no end in sight, revenue is expected to grow by 16.8%, which is really strong. Looking at it visually, by 2026, they should achieve revenue of $4 billion and profits of $750 million, which would be very strong growth compared to today. Let's quickly look at where Palantir actually makes its money. It's very important for companies to know their revenue sources due to geopolitical or sector risks. Revenue is split 50-50 between government and commercial. Government contracts are often long-term, and the government typically pays more, especially in times like these with lots of conflict. It's up to each individual whether they care about this or want to invest morally. Let's look at Palantir's balance sheet. This is very important for startup companies that are just beginning to make money. Palantir is a very good example of how to run a startup company. They have zero debt, which is very good and can continue this way. The company is well positioned against hard times. Now let's look at my medium-term expectations. Right now, Palantir has reacted strongly to the CEO's sale and has fallen several percent. There's a possibility that we're about to build a high and then experience a major correction. For people who entered late and don't want to invest long-term, it could be time to realize partial profits. This shouldn't be investment advice. For people who entered at the lows years ago, it's up to them. If we experience the correction, we would fall into the region of $30 to $38 where you can buy medium to long-term positions. I would naturally continue buying in my private portfolio and our YouTube portfolio. But for traders who like to short, the target zone wouldn't be so suitable. It's up to everyone how they short and with what leverage. The current zone is too large for me to profit from in the medium term. The risk-to-reward ratio is too low when you look at it. I would rather short if it goes above $46, but everyone must decide for themselves. You should only short if you have good risk management and experience. But if it falls below $38, it would be very profitable to buy again, because we could see another doubling afterward. The stock is particularly exciting for growth-oriented investors. From current price levels, the Palantir stock has a drawdown potential of 8 to 27%. Long-term, speaking for the next 3 years from today's prices, we could see performance of at least 89% up to almost 200%. And I could imagine that will rise even further before the cycle ends. When buying the stock for your portfolio, you shouldn't buy too little. It can be one of the 5 or 10 largest positions. The stock wouldn't have such a downside risk if you buy it at $35. If you buy during the correction at $35, you could achieve at least 127%, up to over 250% returns. Compared to the indices, this would be a significant outperformance. I hope you enjoyed the video. Comment on which stocks I should analyze next and see you next time.